Only days have passed since Donald Trump announced a sweeping 100% tariff on Chinese goods, and the trade war between the world's two largest economies has once again spun out of control. The White House justified the move as essential to defend national interests, but behind that statement lies something far greater: a clash of global ambitions that could shake the foundations of the world's financial system. According to Bloomberg, the tariff decision came in direct response to Beijing's move to restrict exports of rare earth minerals, vital components used in the production of microchips, batteries, and defense technologies. China, which dominates nearly 90% of the global market for these materials, has effectively cornered the United States. Washington interpreted this as an act of economic aggression. Now, it's China's turn to respond. As reported by the Financial Times, citing sources within the People's Bank of China, Beijing is weighing a step analysts are already calling a «black day» for the United States: a partial or even full-scale sell-off of American government bonds. China, the second largest holder of U.S. debt after Japan, currently owns over $770 billion in Treasury securities. The sale of even a fraction of that could unleash a market-wide panic, crash the dollar, and set off a global chain reaction. Reuters reports that, in recent weeks, the People's Bank of China has significantly ramped up its gold purchases, pushing reserves to record highs, estimated at over 2,300 tons, as gold prices shattered all-time records, exceeding $4,000 per ounce. Analysts say this is no coincidence. Insiders claim Beijing is deliberately fortifying its position in precious metals, preparing for a financial storm and a gradual move away from the dollar. According to the Wall Street Journal, an unnamed Chinese finance official stated that Beijing has observed how Washington wields the dollar as a weapon, and believes it's time to rebuild the global system so it no longer relies on a single currency. While Chinese authorities publicly deny any intention to dump U.S. debt, their actions tell another story. Investments in American bonds have plummeted since August, and amid ongoing sanctions against Chinese tech firms like Huawei, Beijing is openly discussing a regional financial network within BRICS, one that would operate using the yuan or digital currencies. Nations such as Brazil, South Africa, and Saudi Arabia have already voiced support. Tension is mounting in Washington. Analysts from the Center for Strategic and International Studies warn that any attempt to pressure China now risks a counterstrike capable of shaking U.S. financial markets. Since the first rumors of a Chinese bond sell-off, the Dow Jones has dropped 5%, and the dollar has weakened against major global currencies. Investors are fleeing to gold, and major banks are revising their yield forecasts. Yet Donald Trump remains defiant. In a White House press conference, he declared that America is ready for any scenario, and that China is too dependent on the U.S. market to take such drastic action. But Bloomberg intelligence experts say Trump underestimates the scale of change underway in China. Over the past 5 years, Beijing has steadily reduced its reliance on the dollar, built alternative financial systems, and expanded trade in national currencies with allied nations. Inside China, the situation is portrayed as historic, a turning point toward an era where the United States is no longer the sole pillar of the global economy. State media, including Global Times, boldly declare that China is prepared to confront America with its own weapon, finance. Propaganda outlets are filled with messages of financial independence and quotes from Xi Jinping about a new global balance. Beijing's strategy is cautious but deliberate. Should it proceed with a large-scale sell-off of U.S. bonds, Chinese institutions plan to act through affiliated banks and investment funds to prevent market panic and avoid an immediate dollar collapse. Meanwhile, China's Ministry of Commerce is holding talks with Russia, India, and Middle Eastern nations on creating a new payment system independent of SWIFT. According to Nikkei Asia, this could be the prototype for a BRICS financial platform set to launch next year. In the U.S., alarm is spreading across political and financial circles. Senator Marco Rubio has described a potential Chinese sell-off as an economic strike, while former Federal Reserve Chairman Alan Greenspan warned on CNBC that a mass dollar dump could send the U.S. economy into shock and ignite uncontrollable inflation. European media outlets are calling it a financial tsunami that could devastate Western markets. Analysts at Deutsche Bank predict that if China offloads even 5% of its U.S. bond holdings, it could raise American yields by 1.5 points and spark massive capital flight. Still, the situation remains complex. China understands that a full-scale U.S. collapse would hurt its own economy. The American market still accounts for over 15% of Chinese exports, and a sudden dollar crash could bring enormous losses. That's why Beijing is moving gradually, seeking not instant chaos, but a slow, calculated redistribution of power that could erode U.S. dominance over years, not days. Meanwhile, gold continues its relentless climb. Kitco News reports that central bank purchases of gold are at record highs, led by China, Turkey, and Saudi Arabia, all linked to BRICS. Experts are calling this the beginning of a golden era in global finance, as trust in paper currencies deteriorates. Inside the U.S. Treasury, sources say the White House is urgently drafting contingency plans, ranging from temporary capital controls to restrictions on foreign transactions, and even the suspension of stock trading in case of market panic. But analysts warn, if China truly decides to liquidate its holdings, no measure can stop it. All this unfolds against a backdrop of rising geopolitical tension in the Asia-Pacific. China is expanding its military presence near Taiwan, while the U.S. responds with new arms shipments to the island. The economic battle is merging with a strategic one, and many experts now see this as the dawn of a new kind of Cold War, fought not with missiles but with money. According to The Economist, the Washington-Beijing standoff transcends trade. It's a battle for control over the future of global finance, energy, and technology. And though Trump insists that America has never been stronger, reality tells another story. For the first time in generations, the U.S. is being forced to play by rules it didn't create. Inside America, unease is spreading. Markets are volatile, corporations are freezing investments, and citizens are shifting savings into gold and cryptocurrencies. Social media is flooded with warnings of a looming dollar crisis, and some commentators are calling it a financial replay of 2008. Through it all, China remains silent, but its silence speaks volumes. With every passing day, the world feels the shadow of an approaching storm. And if Beijing truly decides to unload America's debt, that day will mark the fall of the dollar's undisputed reign, a moment already being whispered about as the Black Day for America.